All right, folks. Good morning. Can you hear me?
Yes, sir.
Yes, sir.
Good to see the people.
Good
You
morning.
don't
How
need
are
your
y'all?
camera. What's up, Larry? You don't need
Not
to
much.
turn your camera on. I'm going to leave mine off because we're going to be focused on the screen. I'm going to share my screen so you can see the charts. So you can leave it on, turn it off. It's up to you.
All right.
So apologies for hitting you cats with such short notice. But life has been a little bit crazy. Just as an FYI, so that you all have a sense of kind of why it's been crazy. So my day job, at least for now, I just don't know how much longer I'm gonna be able to do it because it's interfering too much with my trading. But my day job is I run a nonprofit here in North Carolina that focuses on environmental justice system reform, which is the old criminal justice, and voting rights. Voting rights is the biggest program. And I don't know if you've seen the news, but North Carolina has the only election that is still undecided from November. And let me change that. It's not undecided. It's not certified because
that dude keep asking for recount.
Yeah. He basically has protested. The means by which he's protesting are bullshit. But that's the dance, right? That's what he's doing. And so far, the courts are allowing him to do this nonsense. Well, the woman that he was running against and that he is protesting her election, that woman is my former co-executive director of the organization that I run. Her name is Allison Riggs. So she's a North Carolina Supreme Court justice. She's the incumbent, and he's trying to unseat her and going through a lot of machinations to do that. So we've had a lot to do. We can't be too loud because she used to work here, and we're nonpartisan, which means we can't side with one side or the other. But in terms of every vote being counted or every voice being heard, we've been loud on that because that is what we do. So that's had me tied up. These executive orders from I really hate to call that dude the president, but the executive orders that have come out of this administration have put a lot of pressure on the organization as well because he's been threatening to remove folks' C3 status. So, anytime you have that kind of party going on, it's all hands on deck. I had a board meeting Friday, so they're worried. So I say all that to say that there's been a lot going on. It's not that I haven't been thinking about instructing, but I've had to put things down for a little bit. You probably even noticed the cadence of newsletters has slowed because I don't have the time. So I wanted to get that out of the way, but I did want to run a teaching session today because I've been thinking a lot about it. And I think what I want to do is, first of all, I have it's like 117, it's like 100 slide like presentation that I normally teach this particular course from. But I'm not going to do that. I think what I want to do is move beyond the preliminary and teach you guys how to do this structurally so that your practice over the next days and weeks can be from a place of, okay, this is at least one way to approach it, right? And let me practice it and see what my results look like. How's that sound?
You
Sounds
all
good.
for it? Let's do it.
All right. So I'm gonna start with one. First of all, let me ask: have you all had a chance to sign up for a free account here on TradeView?
Yeah.
Yes.
Yeah.
Everybody has one. Okay. That's important because this is probably the most robust charting package that's out there right now, right? Like Thinkorswim is cool. It's attached to like a broker, but this you can attach to any broker, right? Like, so if you have an account at Interactive Broker, you can set it up and you can trade through this platform. So it's really good in the sense that you learn this platform. You don't have to then go learn another platform when you set up your trading account. Does that make sense?
Yeah.
Yeah.
Mhm.
All right. So look, at the end of the day, what you're trying to do is number one. Well, let me back up again. I know a couple of you have some experience with some swing trading. I want you to back off that for a second, and here's why. I don't want you to conflate your performance, right, using any old method that you have with the performance of the new method that you're going to have going forward. Does that make sense?
Yeah.
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 Right. And it's really easy to do that. In fact, I did it, right, years and years and years ago. I did that very thing, right? Like, so I was just responding to, oh, this is a trade from a system that I learned. Oh, this is a trade that looks good because it just looks good, right? And I wasn't differentiating between the two. So after I had a bunch of trades, because I hadn't been very disciplined with respect to narrowing and keeping my focus on the kinds of trades that I had built a system for,
Mhm.
the results didn't tell me as much as they could have otherwise told me, right? Because you want to be in a situation where you can rely on your results, right? Because the more you can rely on the results that you have, the more that strategy becomes a part of you. The more it becomes a part of you, the better you will be at trading it, right? Because you won't doubt it in the moment that you need to like not have doubt, right? You won't doubt it when you have 4 losses in a row, right? You won't
Right.
doubt it because you have worked to make it a part of you and your trading DNA so that the doubt that might otherwise creep in doesn't. Okay. So I just wanted to get that out of the way. Here's the other thing. How much practice have you guys gotten in? Right. And like just it's all friends and family here. So be honest. How much practice have you gotten in? Practice using whatever methods like came to mind, whether it's something that you saw somewhere else. It's, you know, you licked your finger and stuck it in the air and like, oh, the wind's blowing this way, whatever it is. How much practice have you guys gotten in?
Few months.
Yeah.
Like what?
I'd probably
Maybe
say
Couple years.
Couple of years, Jay?
Yeah.
Yeah,
Like
what'd you say?
I said a
maybe
few
a month
months.
and a half.
Larry?
Maybe a month and a half. Ever since you introduced me to the TradeView, I've been trying to practice with that because I was using. Well, before I was trying to use Charles Schwab, but it didn't work out for me.
Okay. You were trying to use it live?
Yeah.
Okay.
Like I have
Brand-
some monies. I have a couple of $100 stuck in there that I don't even know how to retrieve.
Huh.
I definitely, basically, I'm trying to learn how to use, all the different stuff, but
Right.
I definitely um, try to look in and try to, like I used the Yahoo thing a couple times, but between my day job too, I'm trying to figure it out in part-time status too, so it's
Yeah.
taking a little.
Gotcha. Okay. So I'm gonna give you guys a couple of truths, right? Number one, you can absolutely make a fuck ton of money trading, right? Don't let the uh 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 advertisements and the all the articles that you'll see coming out talking about why short-term trading doesn't work and this and that and the other thing. That's bullshit. The reason that everyone believes that is because the only people who get loud are the people who go into it, don't know what they're doing, lose a lot of money, fuck up a lot of money, and then now they turn around and they're like, oh, that doesn't work. Well, no, you didn't work, right? But there's a difference between those two things, right? There's a common misconception. 95% of people who go into short-term trading lose money, right? I'm gonna give you the short version of an article that I wrote. If you take 100 people who decide I'm gonna get into trading, right? 90 of those people go in and fly by the seat of their pants. They don't get any training. They don't do any practicing. They don't do any reading. They just jump in and say, oh, this looks good. They take tips. They do all those kinds of things, right? So that would be like any job that you can name, right? You don't get any training. You don't know how to do it. You just jump in and wonder why you don't have success, right?
Yeah.
The other 10 people go to seminars, read books, really study, really try to practice, right? They got a 50-50 chance, right? So 5 of the 10 will be profitable, go on to be profitable, and the other 5, maybe because of their emotional makeup, aren't successful. But understand that 50% is a much better success rate than 10%.
Yeah.
Right?
Sure.
And that's why you get that 95%. That 5 of the 100 are the people who end up having success. I mean, in general, right? It could be 6, it could be 9, but over time, it's 5 of the 100, right? And that's where that 5% comes from, right? But they don't tell you the full story, right? So that's the good news. There's a lot of money available that can be made doing this, right? Here's the bad news. Most people won't make the money, right? Here's why. Most people are in the 90 who don't train, who don't practice, who are looking for excitement, right? Good trading is boring. I'll be the first to tell you. Good trading is boring because you have to keep doing the same thing, waiting for the right opportunity. And that gets boring, right? So the majority of people who go into this will not have success. And that's the way it should work, right? If you're not willing to put in the work, you can't expect the market to reward you, right? There are a lot of people that you'll hear say, the market is against me, and the market could give 2 shits about you, one way or the other, right? If you interact with it profitably, or if you interact with it and lose money, the market does not care. But that's part of what I have always loved about it, right? There is no racism in the market. There's no gender preference, right? It could be, as most businesses should be. It could give 2 shits about your sexuality, right? None of that stuff matters. Doesn't matter whether you live in North Carolina or New York or California or South Dakota, doesn't matter, right? The market cares not about any of us, but that's an advantage. Here's the other thing. People say that, you know, it's the big funds that have all the advantages. Bullshit. What happens is most small traders give up their advantage. You as an individual trader can be more nimble than a big fund, right? My wife and I used to have this argument all the time because she was a portfolio manager at Goldman when I was a trader there. And she would say, like, this approach works best, right? She was a fundamental investor in the whole thing, right? And I was like, okay, I hear you. But the reason that it works best is because you have to build positions in names, right? You have to always own because it was a mutual fund. So you always have to be long, right? You can't go to cash. That's advantage number one for us. B, there are a limited set of names that you can trade in because you guys got billions of dollars under management, right? So an individual position is going to be a few $100 million. Well, you can't squeeze that into a small cap name, right? You can't squeeze it into, but we can play in those names if we so choose, and if we put the right strategy to it, right? So I say all that to say, most people, I'm hoping it won't be you guys, but most people won't find success with this because they're not willing to commit to it and truly commit, right? Commit means you don't risk money until you know what you're doing, or until you have a sense that you know what you're doing, right? And you've proven it out without risking any money, right? Brandon, I hope Steph is listening to this because I know she'll like that, right? The way to approach this is to risk no money until you have an understanding of you only need one strategy. I trade the same way now. I've been trading the same way for the last probably 13 years, right? With some small modifications. And I've done all the things. I've bought indicators. I have sold indicators. You don't need any of them, right? I don't even sell my indicators anymore because all the indicators do is just give you a different way of looking at the same shit, right? So the indicators that are available to you free of charge in this and any other platform are more than enough for you to do what you need to do in the market. Right? All right. So I'm gonna get off my soapbox and move to talking about the basics of how you want to do this. All right. So any name that you're looking at, right? This is the Qs, right? The technology index, NASDAQ technology index, the NASDAQ 100. Any stock that you're looking at, I suggest, especially if you're looking at it and trying to evaluate whether or not it's something that you want to play in, right? I suggest, you know what, this is probably too familiar to folks. Let's pick another name. All right, AXON, Axon Enterprises. It's on the TAOST index of names. So let's look at this. All right, so anytime you have a name like this, the first thing that you want to do if you're looking at a name and wondering and thinking about whether or not you want to buy it, the first thing that you need to do is, I say, go to a weekly chart, right? And just back out and look at what it's been doing over time, right? What is that doing for you? The market generally and stocks, the market generally and individual stocks more specifically have a tendency to keep doing the same thing they've been doing, right? People have been buying this stock for the most part for a long time, right? So because of that, they have a tendency to continue moving in the same direction that they're moving, right? Likewise, I was telling, I think it's this, maybe not. I was telling, this is it. I was telling Brandon, I think it was you I was talking to about Sears. A friend of mine from way back. She's a single mom and was looking to make some extra money in the market. So I taught a class that she came to in 2016. And I taught her in that class to focus on the cues, right? But her former brother-in-law brought her Sears because they were going to turn their real estate hold. They had all this real estate that they own. So they had to do something with it because they were basically going out of business. So in his mind, they were going to have to sell it, right? Which was going to change the valuation on the company, right? Okay. This is what actually more like this. This is what we came in looking at, right? It had already done this when she reached out. So this is what we were looking at, right? And it was doing this. And by the way, it actually wasn't even this chart because when they filed for bankruptcy, they changed altogether. The reason that the symbol is now SHLDQ is because they had to give up their listing, right? They used to be I forget what, maybe just S, but it used to be like trade on the big board and all those things, right? But the stock looked like this for a long time. As a matter of fact, I'll just do this. I won't say that much about this. I'll just send you guys the video that I did in response, and you'll see how far back the chart goes and how poor it looked. And what I said to her basically was, stocks keep doing the same thing that they've been doing for the most part, right? Like they just don't, unless something fundamental, there's that word, something fundamental happens in the business to change the market's perception of the business. Because that's all, as a trader, that's all you trade. You don't trade the earnings and the this and the that of the company. You trade the market's perception of those things. And the way that you determine what the market's perception is how the chart moves, right?
Mm-hmm.
That's how you know what the market thinks about, because the market votes every day, right, on the value of all of these stocks. So the way for you to understand what the market is thinking about a given stock, right, at any given point in time is I look at this and I say, it has some healthy pullbacks, but in general, the market is a buyer of this stock. But that's all you can say on a given day, right? Like saying where the stock is going to be in 3 years and this and that and the other thing. That's not a thing. And by the way, it's not your job, right? You don't care that much about 3 years. You care more about 3 months, right? Because that's what's going to allow you to extract profits for yourself. So I got off track. So here's what you want to do, right? You want to find a stock that's trending higher, right? That's the first step. You find that, and I would say right here, like this one's a little bit wrinkly, but let's go with it anyway, right? So right here, it was down, down, down. It was great uptrend, but down, 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 down. Then you had this week close higher, right? So it looks like it's going to give you what's called a cup with handle formation, right? So what often happens is a lot of people like to trade cup and handles by trading it when it breaks through the high up here. So buying when price goes through this high up from back here, right? So this is the formation of the cup, right? I prefer to find things that are forming the cup or forming the handle rather, right? Because the cup is would be considered more like over here, right? Forming the handle, and you want to buy like in here. Your risk is lower. If it breaks down through here, then you know, okay, I'm out on either the trade or I'm out on the idea of being a buyer of this stock for now. Does that make sense?
Yeah.
Well, wait a minute, hold on.
Yep.
You said now you said the handle was back a little bit farther though, right?
No.
And you
So
said,
no.
oh,
So this is technically the handle, the whole thing,
okay,
right? And normally this is it's actually not the best example of a cup and handle because normally what you want is, let me see if I can find the stock that is actually okay. So this one I'm actually about to post, right? So you guys are getting a heads up. So this would be the handle. I mean, this would be the cup itself. You see this?
yeah, the big, yeah, okay,
This whole thing right here. This is the
right.
cup. What normally happens is even when you get a breakthrough, a small breakthrough to new highs here, this thing will pull back a little bit and it will create, let me see, I haven't normally been able to use the drawing thing on here very well, but hold on. Let me see if I can do a little better today. So normally what you'll have is it'll create something like that looks kind of like that when you pull back enough from it, right? The price action will pull back and dance like this into this area, and then when it starts to move back to the high of this handle, that's when you expect that it's going to take off to the upside. Does that make sense?
I don't understand the handle part on there with the
Okay.
drawing. Yeah.
Okay. No, that's what I want you to do. I want you to ask questions. Hold on. So let's do something a little bit different.
Yeah, you definitely beat me to it, because I was about to say the same thing.
Okay. So let's say for the sake of saying that the cup is over here, right? Just for now, right? Let's say that the price action over here, farther to this side, it's not the beginning of this stock trading, but it went down like this, came back up, and formed this as the cup. Does that make sense? Do you understand that?
Yeah.
Okay.
Yeah.
So if this is the cup, let's say that this is the handle of the cup, right? And by the handle, I mean that little ring, when you have so this is that ring,
Okay.
right?
Right.
But how do you know when the cup starts? Or you kind of determine where you want to start from?
That is that's the trick, sir. So and it comes from, so I look at stocks now
Mm.
and I see formations, but it's because I probably looked at several 100,000 charts over time.
Right.
When Adria and I used to travel, she used to
Mm.
get really annoyed with me because I always took my laptop. And that was back in the days when you had to download the chart updates each day.
Mm.
But then I could, like, we get on a plane and I could flip through them, right? Because there was no internet on the planes, but I could flip through the charts. And what happens after, the reason that I wanted you guys to get started looking at charts immediately is because that in and of itself compounds. You start to see patterns in the charts.
Mm.
Does that make sense?
Yeah.
And it's those patterns that allow you to extract return. I'm
Mhm.
gonna go a little bit further here than I normally would, but just to explain a point. So I used to have a pattern that I traded a lot, called a drift, right? And it's
Mhm.
just another way of looking at what we see here, right? So market goes up hard, right? Pulls back like this,
Mhm.
right?
Mhm.
So for me, the break was to buy when price started to move higher, right? When the price action on the daily started to look more bullish.
Mhm.
You see what I'm saying?
Mhm.
That was the play for me.
And when you
Does it
say
make sense
bullish,
that would and but that's all because I've seen so many charts
Mhm.
where the pullback looks like this, right?
Mhm.
And and now I would have had false starts because I probably would have looked at it right here and been like, oh,
Yeah.
that looks like a drift, right?
Mhm. Mhm.
But here's the trick. Because I would have been trading from this chart, this is the daily,
Mhm.
right? So the range on each one of these candles represents a day. And the range on each one of these bars, you feel me?
Mhm.
Is much smaller than the range of a week.
Mhm.
And if you put your stop on the other side of any one of these candles, right, it's going to be much tighter than if you were putting your stop on the other side of one of these candles. In general, right? Some of these are smaller, but not for the most part. Does that
Mhm.
make sense?
Yeah.
Right?
Mhm.
The reason that I got into day trading in the first place was not because it was exciting and it was this and it was that and blah blah. I got into day trading because I was looking for ways to make my risk on each trade smaller.
Mhm.
Mm.
And one of the ways that you do that is you go down in time frame, right? So
Mhm.
if I made these look like range charts, yeah. All right. So let me set the range. Instead of 4R, we'll have it be
now, real quick, while you're doing this,
yeah.
now when you say range, is this is daily right here that we're looking at, or is this
No, the range chart is the high to the low,
okay?
right? It's the range of prices over any given period,
Oh, okay.
right? But what the range chart does is it takes time out of the equation.
Mm.
You see what I'm saying?
Yeah. Yeah.
So you then are in a situation where so this is a 10 range chart, right? So that's all you're looking at, right? See, all of these are basically the same size
Mm-hmm.
Mhm.
because the range in prices is the same.
Mm.
Oh, it's like in increments, kind of. Every line is like the same amount.
Say it again.
It's like it's in increments. Like every line is the same amount.
Yeah, don't write anything down about this chart. I
Okay.
probably shouldn't have even shown it to you
Mhm.
because it's only relevant because I was just trying to show you like this range, right? So this high to low is different from this high to low. See how much smaller they are,
Yeah.
Yeah.
Mhm.
right? So going down in time frame, think of it this way. A a, a chart can move a huge distance. Actually, I could have done it differently. Let's do it this way. All right, so this is the daily, right?
Mhm.
A chart if I show you guys this, right? This is a 3-month chart. So each one of these candles represents 3 months. See how big that range is,
Yeah.
right? If I drop it down to a monthly, it's similar because most of that movement happened over that. But you see how the range is starting to get smaller?
Mm.
If I drop it down to a weekly, see that? A lot of that happened that week, but still, overall, the ranges are getting smaller. See that?
I'm kind of confused. It, uh, it, the rainbow in the range because one range is kind of longer than the other.
Right.
Or the-
Okay. Yeah. So it's not going to be the same range every period,
Mhm.
right? So all this is in this week, the price went from it opened at what maybe I should be showing you guys these charts instead of candles. The price opened, see that left tick right there?
Yeah.
So that's the open, that left tick. That right tick is the high, right? In this on this chart, sometimes it's the other.
Yeah.
I'm sorry, this is
Oh.
the close. That right tick is the close.
Uh-huh.
Open, close. The high is at the top, very top up there. Can you see it?
Like the
Mhm.
Yeah.
Right
little
there?
pieces.
The
Yeah.
little stick. Yeah.
Yeah, and the low is right there,
Mhm.
right?
Yeah.
Open, high, low, close, or open, low, high, close. Either way, the range of any candle or bar is the high to the low.
Mhm.
That's the definition of the range,
Okay.
right?
Mhm.
And it can be it's all about where it opened for that week. So this stock opened this week at this price. What is that? 67.55,
Mhm.
and it closed that week at 88.33.
Okay. Each range is a week, right?
No, each time period here is a week,
Oh, okay.
right?
Oh,
And this is the range over the course of that week.
okay. Each.
And this is the range. This is the range over the course of the next week. This is the range over the course of the this past week.
Mhm. So each line, each one of those lines, that's representing a week, not a day.
Correct.
Is representing a week. But if I do this, now it's a daily chart.
Got it. Okay.
Now it's a
Yeah.
day. Yeah.
Now each one that range is Friday, Thursday, Wednesday, Monday.
Okay.
Make sense?
Yep.
Yeah.
Okay. So what I was saying was by virtue of the range going down, right? So this is the daily, right? If I keep going and I say, okay, let's see what the hour looks, the 1 hour, right? So for every hour, you see how that works?
Oh, that's for one day, the hour for the day? No,
So
no.
this is 1 hour.
It's the
Yeah.
hour.
Oh,
That's it.
oh,
Make sense?
Yeah.
yep.
You see how much smaller those ranges got?
Yeah.
Yeah.
You had to expand it out to get it. Yeah. Mhm.
Exactly.
Yeah. And
But
this
the
for the
range, the difference between the high and the low got smaller. And that's part of the key to short-term trading, right? You reduce your exposure on any trade because your stop can be tighter.
okay.
Okay.
You see what I'm saying? And so for
Yeah.
the same amount of money, you can trade more shares or contracts or whatever it is because your stop is smaller.
Okay.
That's position size, and we'll get to that.
Okay.
But I wanted to help you understand why it makes sense to even be thinking about going down in time frame, right? All right, so this is the S&P 500 ETF, something that's commonly traded by folks. Let me back it out. Let me go here. All right. And this, by the way, looks like a better cup with handle. See this?
Mm.
This is the cup,
The cup. Yep.
Mhm.
right?
And the
And it
handle
started
goes-
back up, but then it pulled back right here. And sometimes these things will look a little raggedy. That's why having a lot of experience looking at charts
Yeah.
will help you, right? Because you would have thought at this moment, with my level of experience, I would have
Mhm.
looked at this. Had I looked at this, this is a monthly chart, but had I looked at this at the close of this month, what month is this? At the beginning of December, the end of November, if
Mhm.
I had looked at this, I would have said, shit, this is going higher. I probably did. I probably posted and said something about, like, given how this closed,
Mhm.
it's very likely that we're going to get a Santa Claus rally. I have to look back in my post to see if I said it, because it looks like the kind of thing that I would have been like, yeah, that looks, you know what I mean? If I traded individual stocks and ETFs, that's something that I would have done.
Okay.
Make sense?
Yep.
Any questions?
Yeah, I guess you kind of answered my question is, I guess repetition, I'll be able to identify them better,
Absolutely.
going
Yeah.
forward. Yeah.
Absolutely.
But like you said, you explained it and I was able to identify the cup and the handle right when you was about to say it. So,
Right. But so what happens is you it's called screen time, right?
mhm.
You just need screen time, right? Like, so and it takes tons and tons and tons of reps.
Mhm.
But you'll ultimately begin to see it lay out, right? And you'll see the patterns form. Like iTrade was called a tick chart intraday, right? So it's this, but super fast. But because I have the experience that I have, I see the patterns forming, right? And it allows me to go in and only risk, 5 ticks on a trade, looking for 10 to 20 points. You see what I'm saying?
Mhm.
And that split, right, allows me, I can be wrong several times and still make money on the day because my risk is so small relative to the gains when I win. Make sense?
Mhm.
Yeah.
All right.
Mhm.
So, here, I'm going to make this a little fast today, because I really just want to lay this out so that you guys can go and start playing with it. And the other thing that I'm going to do is I need to get you guys signed up for one, like, email newsletter that is just you guys, because I'm going to send to you in the fall of 2020. I ran a multi-week class where I walked people through a number of different concepts related to trading, and I recorded it. So um, it will allow you to hear me say some of this again in a different context, because that'll also help it stick. And you can also do it when you want, right? You can do it, late when, your lady's down and, like, you're just bullshitting, right? You can use that time to look at charts and or watch the videos, right? But I think you'll get some value out of it. But I'm going to have you sign up for that list, so it's just you guys, right? And I'll be able to send them directly, the recordings directly to you.
Okay. Thanks. That's nice.
All right, so we're looking at the monthly. We want to be looking at the weekly here. All right, so here's essentially what you want to do, right? If any stock that you're looking at, right? Once you decide that the overall trend is to the upside and you get a pullback like this, right? You're thinking in your mind, this is a pullback versus a reversal. A reversal means like the market has completely changed its mind. It's going to go down and keep going down, right? It's going to go down, move up a little bit, go down more, move up a little bit, go down more, right?
Mm-hmm.
I don't think it's time to make that call yet, because this is the background of the S&P. Actually, let's do D. Right? If we go way back,
Been doing
no matter how bad it was, you feel me?
Back up.
it. It always rally back.
It always came back, right? This was bad right here, right? In 20,
Yeah.
it was bad. Worked its way back, same thing. As a matter of fact, I'm going to tell you guys something that is a bit embarrassing for me as a trader, but it taught me a lot. Back here, like after the tech crash, right? The dot-com crash,
Mm-hmm.
I was on the trading desk at Goldman, and one of my buddies worked at one of the funds that I covered, and we got short together, right? We bought puts, right? Because the market had rallied after crashing here. Sorry, hold on. So this, by the way, was when I in the fall of '98, right here, was when I took the bar in New York and was getting ready to start my job. And we were worried that they were going to, this is what the Dow Jones did. So we were worried that they were going to renege on the job offers, right?
Mm-hmm.
Fortunately, they didn't. This was the Russian debt default back here. At any rate, so this is 2000, right? We got the crash, going down. And then we rallied right here. No, not there. Oh, it was later. We rallied. It was this rally, right? So we got short thinking, oh shit, this is just another of the, right? This thing is doomed, right? We get
Mm-hmm.
short, comes down. So we're in the money for a while, and then it started to do this, right?
Mm-hmm.
Matt got out. He was like, fuck it, I'm covering. Like, I don't know. There are too many people talking about buying too much shit, so I'm out, right? I played Billy Badass and stayed in. And in fact, added to a losing position. Rule number 1, don't do that, right?
Mm-hmm.
But I did, threw good money after bad. So I got taken out of this trade like somewhere around in here, right? I lost $30,000 on that trade.
Mm-hmm.
Because, and it was before I was the trader that I am now, right?
Mm-hmm.
Here's why I lost the money. You're going to be wrong a lot as a trader, right? You're going to have a lot of losses. You're supposed to, because it's a game of probability. It's not a game of exactitude. You're going to have a lot of losses. The key is keeping your losses small, but also taking the damn losses. The reason that I lost money was because Matt stopped himself out. I didn't, right? I got stubborn. I was like, I'm right. This thing is going to collapse again, and I'm going to make a fuck ton of money, and I'm going to laugh at you, right?
Mm-hmm.
Never do that. When you set your stop, you never move it further away. At most, you can move it closer to you. You can trail it. You can move it closer to you, right? So that you get stopped out sooner, but you never give it a little bit of room, as people say, right? Which is what I did and why I lost so much money. Completely my fault. Taught me a very valuable lesson. So, I hesitate to say it was worth it, but it ultimately was, right? Because
Lessons.
This particular thing I've never done again. Right? So why am I telling you guys that story? To save you, there's a very good chance that you're going to do it anyway. But hear me when I say cardinal rule, never, ever add to a losing position. As a trader, right? Now, there are strategies where you selectively add to your long position, like in retirement accounts, right? You have a long-term account where you're trying to hold on to, you have years and years and years for things to play out. I would say that you, even if it's down, you add to your position in the indexes, never in an individual stock, but in the indexes, because ultimately, even someone as screwed up as Donald Trump can't kill the stock market. Does that make sense?
Right.
So ultimately, even with this pullback, I mean, the truth of the matter is this pullback looks more dramatic, right? Until you put it into context. It's not even that deep.
Yeah.
Right?
Compared to some of the other ones.
Exactly. So at any rate, what's likely to happen here is you're going to have this thing come out of here and go higher. Hopefully it won't happen before Trump is done, because you know he'll take credit if it does and say it was his plan all along. So anyway, all right. So what you want to do is you have this pullback like this, right? And once you decide, maybe you decide after this week, right? It closed on near the high right here. Hold on. It closed near the high right here, right? Maybe you decide, okay, now it's time to take a buy posture. What does that, what do I mean by that? I'm gonna break it down a little bit more. If you have the MACD on this chart, this is the MACD down here, moving average convergence divergence. It's a symbol that's it's an indicator that's available in your
Free indicators.
yeah, in TradeView, it's available, right? Like, so you don't even have to, like, it's not something that you have to purchase or anything like that, right? It's available on it's available in Yahoo charts, right? So if you have the week close like this, and you have this one, this bar right here, close a little bit higher than this bar right here, you can take a buy posture, right? What do I mean by a buy posture? That means so your ultimate stop, meaning where you will change your mind about the current direction of the market, is right here below this low, right? So it's 36,611, right? So I would put a line in there at that point. Let's put right there.
Could you repeat that one more time for me?
I will.
Thank you.
All right. So that's not the exact price, but it's close enough. So when you get this is like step one, right? So this is a weekly chart, and let's move it here, right? So let's say on this was last week, right? It closed like this, right? You now have a buy posture, meaning what you're about to do, what I'm about to show you is how to drop down to the daily chart to look for trade entries. Now I'm about to fuck you up. Why are we dropping down to the daily chart? Anybody?
To get
a more precise entry.
Say it again.
To get a more precise entry.
More precise and
It shortens it.
Shorten the risk.
shorten the risk. That's it. Right? Precision. Exactly, Jay. And you make your risk smaller by definition because the ranges get smaller, right?
Mm-hmm.
So write this down. What you're doing is you're using the weekly and the higher time frame to give yourself context. Everybody know what that means?
Yeah.
Cool. So you get you give yourself context and decide, okay, now I think that this symbol is going to, on a net basis, move higher, right? So I can drop down to the daily or smaller time frame, right? Depending on what your days look like and how much time you have available to check the market and all that kind of stuff. You know, it could be that you drop down to a 4-hour chart or a 2-hour chart, right? And then you're checking the market every 2 hours to see, you know, if you had a trade entry set up. But here on this chart, this is where you get your context from, right? This is where you say, in general, this security is moving in this direction. I also, for the most part, I suggest that you limit yourself to being buyers as opposed to getting short. Why? Because when you get short, there is by definition a limit to the upside of the position, right? The most it can do is go to zero.
Mhm.
You understand that?
Mm-hmm.
Say
Larry,
it one more
Shebna,
time.
Brandon, I don't know
I
if
was
you
about to
guys
say it one more.
have,
Yeah.
say it again.
I was about to ask you, repeat that one more time. I
Okay.
think my mic went out just a little bit or something.
Okay. But the other thing is probably that you might not have a complete understanding of what getting short means.
All right, yeah. Well,
Am,
yeah, I
am I
definitely
right?
need that. Yeah,
Mhm.
yeah.
Okay.
You all
Getting short means selling something that you don't own with an idea toward buying it back if it moves lower and you make money, right? So that's what makes the market such a useful tool, right? You can make money if the market's going in either direction if you're right on the call,
Mm.
right? So here's how it would work. Let's say you could borrow a house, right,
Mhm.
and sell the house at $100,000, right?
Mhm.
Now, this is getting into the weeds a little bit. You have to pay interest on the cost of borrow, but we're not going to think about that for now. For now, we're just, you borrowed it,
Mhm.
right? And you sold it short. You sold it for $100,000. You took in $100,000, right?
Mhm.
How do you make money on that house, on that transaction when you um, uh, buy it back and give it to the person that you borrowed, give it back to the person that you borrowed it from?
by raising the price.
Selling it higher. Mm.
No. Remember, you already sold it. You sold it at $100,000.
What did you
Only way
buy
you
it
can
at?
make money is to buy it back cheaper than what you sold it.
That's
Yeah,
it.
yeah,
Mm.
about to say.
Exactly. That's all a short is, right? So the way that you would make money on that transaction is you sold it at $100,000. You sold something that you didn't own, but you borrowed it to sell it, right?
Mhm. Yeah, I got you.
So you sold it at $100,000.
Mhm.
The price falls, call it $80,000. You buy it back at $80,000. So you made how much net of cost?
20,000.
20K.
Twenty
Not
thousand.
net of cost, before cost.
20,000.
20K.
Correct.
Yeah.
You made $20,000 by selling something that you didn't own.
Mm.
That's a legal transaction in the stock market. You
Huh.
understand?
Yeah.
What's the most money that you could have made on that transaction?
Uh,
Well,
100,000.
100,000 as a limit.
Exactly. You could have made $100,000 if it went to zero,
Zero.
yeah.
Yeah.
right?
Yeah.
Mm-hmm.
Because you could get it back for nothing
Yeah.
and give it back to the person that you bought. They wouldn't want it, but you can give it back to the person that you borrowed it from, right?
Yeah.
Mm-hmm.
But that $100,000 is the limit of the amount of money that you could have made. right?
Mm-hmm.
Okay. Let's take the other side of the equation, right? You buy a house, let's say for $100,000, you're liquid, you buy it for cash, right? In theory, the price of that house can go to infinity,
Mm.
right? There is no limit to the upside price possibility.
As far as inflation and stuff like that goes,
The
Doesn't matter
market
how it
price,
gets there,
the
okay.
right?
market prices it.
Right? We didn't worry about how it went from 100,000 to zero. Likewise, we're not worrying. Shit. Hold on, I gotta plug my computer up.
Mhm.
All right. So we didn't worry about how it went from 100,000 to 80, or how it went from 100,000 to zero, right? Same thing to the upside, right? I mean, who could have or would have predicted this move? I mean, I actually did, but
What, Bitcoin?
yeah.
Mm.
So, but this move right here, I can send you the article that I posted saying, "Uh-oh, I don't know," right? And I did it based on the chart. I didn't know anything. I didn't pay attention to the news around Bitcoin. None of that. You feel me?
Mm-hmm.
That's the power of this. You don't have to know. The market knows everything, right? Like, you got people sitting around like doing research and calling themselves, a lot of it they do because they want to feel smart. I'm like, cool. I'm okay with you feeling smart. The problem that you have is that you ultimately have to come fuck with me in the market. You see what I'm saying? And I'm limiting what I care about to supply and demand. You got all this other stuff, these predictions about like what demand is going to be for the product of the company and this and that and the other thing and so on. I don't care about none of that. Right? All I care about is the market's perception of the security that I'm trading. And since you're rocking with me, that's all you guys care about. Understand?
Mm-hmm.
Make sense?
Yep.
Yep.
Mhm.
All right. So let me go back to, I keep taking myself off track. All right. So here's one other thing. I'm gonna take myself off track again. Here's one other thing. You guys can probably guess that I love this, right? I and I do, right? Unabashedly. I love this. Let me tell you why. And you guys have some of this as well, I'm sure, because you're black men. I don't have to worry about how a boss feels about me.
Mhm.
I don't have to worry about how my coworkers feel about me. I don't have to worry about none of that. You understand?
Mhm.
All I have to worry about is becoming a better trader, myself. Right?
Mm-hmm.
This is one of the most individual endeavors that you can ever get involved in, right? Because it's about how you can master your subconscious, master your own like conscious mind, and control yourself, right?
Right.
Brandon, when you hit me with the idea the other day, you can get tips all day long, right? But what you have to commit yourself to doing is taking that tip and running it through your own chart analysis. And if your chart analysis says, yeah, not a thing, then game over.
Right.
Right? Nothing else matters. Once you commit to this, nothing else matters because the chart will tell you everything. Right? Brandon, do you mind if I pull it up real quick?
No, I don't. Yeah, sure. Yeah, absolutely. And you want me to tell them what tip I was talking about, or you
Yeah, if you don't mind. I mean, you know what I
Yeah.
mean.
So
Shares. You know, keep it where
yes.
you want it.
So basically, guys, some of y'all know I'm in the mortgage industry. That's my day job. So the tip came in from actually my boss on, in the mortgage side that Rocket had purchased Redfin. And if you know anything about Redfin, that's like Zillow's little brother. So Rocket and Redfin are trying to go after Zillow's position in the market. So basically, I was asking Ryan, do you think it's something I should jump on train? Because of course my chart analysis is not where needs to be right now. So I needed to ask somebody. And so I was asking them, do you think I should jump on this train based on this information and, the different stuff that's going on with this company? And this is where we are right now.
Right. So this is what the chart looks like, right? So I'm going to tell you what I see. Right. It could be that the rumor could be right. Here's the problem with rumors. Somebody with some deep pockets knows what the move is going to be, and they're in the market. Fuck what you heard about SEC and like they catch everybody that does the insider trading and all that nonsense. Just not true.
Yeah.
They can't catch everybody because way too many people do it, right?
Yeah.
So when I hear a rumor that's as explosive as that would have the potential to be, I look at the chart, and if over time I'm not seeing like like somebody coming into the market, like even if somebody had come into the market and bought an extraordinary number of calls, whoever sold them those calls would have been offsetting their risk in the stock, right? By getting short. And that's like not a transaction that you need to understand necessarily, but they would have hedged their risk, right? That them getting short would have brought in buyers, right? So the market would have done this,
Would have
right?
shot up. Yeah.
And the fact that you're not seeing that tells me that A, either the rumor's not true, or B, the market doesn't believe it. Right? So if the market doesn't believe it, I'm gonna rock with the market all day long and twice on Sunday. It could still happen. Right? We could come in tomorrow and this thing open up here. Absolutely. I think it's unlikely because of this.
Right.
Right? And what you all have to condition yourself to doing is even when you hear a rumor, right,
Mhm.
you have to run it through your own chart analysis. And your chart analysis may have come out differently here over, after you've been in it for a while. You may be like, man, I don't know what you're talking about. This puppy's about to go, right? I don't think that's going to happen, but it could, right?
Yeah.
Fine. To the extent that it happens, right? Um, then you have the next level of self-protection, right? You limit your exposure by making sure you have a stop in place. You see what I'm saying?
Mhm.
Mm-hmm.
So anyway, I wanted to share that because it's a concrete example of what I'm talking about and the usefulness of chart analysis, right? People call it technical analysis, but it's not really technical analysis because I'm focusing on price and movement, right? I
Mhm.
assume the volume is there because of like the group of names that I pulled together,
Mhm.
or because I trade the ES, right? The ES trades, kind of 1.3 million to 1.6 million contracts on average per day, right? They don't care nothing about my little 20.
Right.
Mhm.
You see what I'm saying?
Mhm.
Yeah.
Or even the 100. You know what I mean? Like it means nothing in the scheme of things,
Mhm. Gotcha.
right? So anyway, any questions about this? Not so much about the
The tip.
yeah,
Yeah.
because I don't know, I know nothing about it.
Mm.
But the way that you take tips, engage with tips. You see what I'm saying?
Mhm.
Because
Discipline
because
again.
because Brandon's boss was felt like he's doing Brandon a favor.
Hmm.
Just like my friend's brother-in-law felt like he was doing her a favor. He's looking out for his nieces,
Right.
right? He's just wrong. That's all. When he gave her this tip, this thing was trading above. It was trading between like $2 and $5, right? So that's how from this day forward, that's how I want you guys to treat tips, right? Like you listen to everything that everybody has to say, but then run it through your own analysis. That's why this is such a powerful concept.
Mhm.
Make sense?
Mm-hmm.
All right. So back to this. All right. So this week closed like this, right? So now you have no, I don't. Yeah, let's use this. Even though the owner's a piece of shit. All right. Same idea, right? You come into it initially, right? It's moving up, right? Everybody with me?
Yep.
Mhm.
Then, so you get this nice pullback. The first time you would have tried it would have been here. See
Yeah.
that?
Mhm.
Right? Down, down, down,
Mm-hmm.
down, down. Oh, that's a nice pullback. Pull back into support. Let's give this a shot, right?
Mhm.
Ooh, maybe you got in. I didn't drop down to the daily yet, but maybe you got in. Ultimately, you would have been stopped out no matter where you got in and where you set your stop because it ultimately went below here, right?
Mhm.
So now you're back into you don't have a negative posture because of this back here, right? But for right now, it's continuing the pullback,
Mhm.
right? Then it
Right.
does this. Make sense?
Yeah.
The moment that it did that, and you decide, okay, I'm going to look for an entry on this stock, right?
Mhm.
Then you drop down to here. I forgot what that date was. Hold on. All right, so that was the week of April 7th, but it closed on the 11th, right?
Mhm.
So that was the close of that week, right? So it's from here that you're looking at the dailies, like, okay, let me see if I can find, and there it is. All right. So where just, and I know there's no reason that you guys would know, right? But
Mhm.
where would the entry be, right? This was Friday. This was the
Mhm.
close of that week and that bar, right? So now your posture is up. You're looking for an opportunity to get in. Where would that be?
Mm.
This is Monday, Tuesday, Wednesday, Thursday, Friday. This is the following Monday.
Tuesday.
I understand why you think that, but I'm going to say no. You know why?
Mm.
Because there wasn't enough of a pullback,
Mm.
right?
Oh, it'll probably be Friday. Oh, I
You
guess
see what
Friday.
I'm saying? And you
Yeah.
get that by feel,
Mm.
right? But you wanted to pull back a little bit. And look, the truth of the matter is sometimes you're going to miss trades because you're waiting for a pullback and it just keeps going, right?
Okay.
Mm-hmm.
Yeah.
Mm-hmm.
But better that you miss that trade than buying it here.
Mm.
Yeah.
You see what I'm saying?
Mhm.
You buy
Yeah.
it here and then it does this,
Yeah.
Yeah.
right?
You lost a lot of funds.
Right. Now you wouldn't lose that much because your stop is going to be tight,
Yeah.
Yeah.
right?
Mhm.
But the like in my mind, it's better to wait for a better pullback than to throw, some small risk away just because you are afraid that you're going to miss the trade.
Yeah.
Does that make
Mhm.
sense?
Mhm.
Mhm.
All right.
That's where the
So
looking for trends and patterns come in.
say again.
That's where the looking for trends and patterns to come in.
Correct. Right. So I would say here, right? See
Mhm.
that gap?
Mhm.
I was thinking put a stop about $88 actually, but Clowell somewhere around in that point.
I would say just above. The tighter
Yeah.
you can make your stop, the tighter you can make your stop, the better.
Right.
Except, except you don't put it this way. You don't want to buy it. Let's say you bought the clothes right here, right? You don't want to buy it at 93.64 and put your stop at 93.55,
Right.
Yeah.
right? Because
Nah.
that's too tight.
Yeah.
I don't know what the average true range on this stock is on the daily. And it doesn't, I don't use the average true range for my stops. I use the extremes of a bar, right? Or the extremes of a swing. So as a general rule, right, I would put my stop just beyond the lower of these two bars.
Okay.
Anybody have a guess why?
Is when the market pulls back, you won't for a liquidity sweep, you won't get stopped out.
That's part of it. But the other reason is if price takes out the lowest price of the swing,
Mhm.
then I know for right now I'm wrong.
Yeah.
Right? Make sense?
Mm-hmm.
Say it again. I
Hey, oh,
can't
yeah. I about to say, come back with that one more time.
Yeah. So if I buy, the truth of the matter is I probably wouldn't have bought until here because this gap happened, right?
Yeah.
But that's fine. So and see, you're buying it higher than here, but you have more proof, that it's likely to go higher. Make sense?
Right.
Yeah.
Yeah.
Okay. But in terms of the stop, let's look at it this way.
Get you clear this.
All right. So I'm just going to change all right. So this is now a line on close chart of the lows of this stock, right? The daily lows, right? That's what it's charting. So so if I bought it up here somewhere, right? I can't remember where it was, but up here somewhere, I know that, and I'm buying it based on this behavior in this area.
Yep.
I know, or at least I assume, that if price comes back and takes out this price right here, this low,
Yeah.
right? I know that for right now, I am wrong, and this chart pattern is not working out the way that I thought it was going to work out.
Right. It's gonna keep going down. At least
Likely,
yeah.
right? So most important, I want to be gone, move to the sideline with my capital, and sit tight for the next opportunity.
Mhm.
Does that make sense?
Mm-hmm.
Jay?
Yeah, waiting for the clarity.
How often do you see opportunity?
Well, and that's the next thing. So, because I trade this, right? So this is the 4 hour, the 1 hour, and the 5 minute of the S&P E-mini, right?
Mm.
These zones are zones that I put on, but this is the intraday, the one that I use as my higher time frame during the day. These zones, the red, the blue, and the red, are the and this line, and this line are lines that are created. They're what's called my power zones, right?
Mm.
And the way they work is I put them on every morning or late the night before. So these aren't put on these aren't after the fact, right? And what these do is they places that price is going to be impacted if it's close to these zones, right? Like, so here, if you look at this, as price came down, look, as it got closer to here, I would have been thinking, and as it did over here, but this was overnight, here and here, overnight, right? But that would also have told me that there are buyers lurking around here because of what this did overnight, even if it's the computers that are coming in to buy as price gets there. So this support, um, but to answer your question more specifically, I showed you that for one reason. To answer your question more specifically, because of the fractal based nature of stock charts. What do I mean by fractals? Fractals are, you see the same patterns on the quarterly, the monthly, the weekly, the daily, the 4 hour, the 5 minute. If I take the prices and the times off of these charts, you can't possibly tell which is which. And because you can do that, then you can increase the number of opportunities that you have depending on what your schedule looks like.
Mm.
Okay.
Make sense?
Yeah, you gotta
Mhm.
be paying attention, basically.
You got to be paying attention. But so who in you all's minds, just off top, who's the greatest investor of all time?
Warren Buffett.
All right, Buffett.
Who'd you say?
Warren Buffett.
Warren Buffett. Any other guesses?
No, I was gonna go with Warren Buffett too.
Okay. No, that's cool. That's cool. That's what most people go with, and that look, it stands to reason.
Mm.
What if I told you there was a trader who kicked the shit out of Warren Buffett?
I wouldn't be surprised.
Yeah, I would say. I mean, every great person got to lose sometime.
This was overtime.
Oh,
Yeah,
well.
I wouldn't be surprised, to be honest.
Okay. So look up the name James Simons. You don't have to do it right now. Write it down and then Google it. He was the head of something called the Medallion Fund, Renaissance Technologies, right? For 30 years, his annual return was 66%.
Wow.
That's amazing.
Warren Buffett's for like 50 was like sub 30.
Mm. Yeah, that's crazy.
James Simons, very secretive, math genius, all the things, right? Like I couldn't even begin to tell you all of the accolades that he had, but I can tell you this. He was very secretive, but I know for a fact that all of his brilliance and all of the mathematical craziness that he understood, he was like a code breaker, for God's sakes. But all of that brought him back to one thing.
What's that?
The reason that he was able to make so much money in that fund was because it was a high frequency trading fund. It traded intraday for the most part, and it only looked to make a little bit on a per trade basis. How did that make money? Do you guys remember hearing me talk about something called expectancy a couple of months ago?
Yeah.
Yeah. Uh-huh.
Okay. Any trading system that has a positive expectancy, you want to trade the shit out of it. And that's what he did. Because he had so much money under management, he had to trade thousands of names, thousands of times per day. Right?
Mm.
So on any individual stock, he was only making a few pennies. But if you're trading, if the computer is trading for you 1,000 times per day, then guess what? A few pennies is okay.
Yeah. Thousands
Big-
of times per day.
Yeah.
Thousands of times, and it's spread across, right? So it's not just thousands of times per day in one stock, but it's thousands of times per day in multiple stocks,
Yeah.
Yeah.
Probably. Yeah.
So, but
right?
how do you do all those trades a day? Was it like so computerized and it's just
It
set
was
to
all
this?
Yeah.
it was all
Yeah,
computers.
I was.
Yeah, it was
Oh.
an algorithm program.
Yes,
They
sir.
got it set up for them. Yeah.
Yes, sir. That and they had they had co-location, right? Like so they had their computers in the same building as the NASDAQ, right? Like they paid to be co-located, right? Like so that their transactions were the smallest increment of a second faster than everybody else,
Mm-hmm.
Haha.
right? So
That makes
they got to take you have the bid and the offer in terms of the spread of the price of a security. And if they wanted to buy, they got to take the offer in front of everybody else if they saw, a mispricing in the market. And those happen briefly, but they happen all day long in multiple stocks. You see what I'm saying? And by
Right.
mispricing, I mean if the market should really be, 25 cents to 26 cents in terms of the spread, you can buy at 26 and you can sell at 25, right? If they see it priced at 25, for the barest amount of time, whoever's offering at 25, they can take all of those shares. The computer can take all of those shares, buy all of those shares at 25 cents. And then they'll turn around and flip and sell them at 26 cents.
Make that penny bet.
You see what I'm saying?
That's more than a penny, bro.
Using that leverage.
But no, I'm saying the penny per stock per yeah.
Right.
If he buy like 1,000 of them though, that's
a lot. Yeah, that's a
and
lot.
multiply that by hundreds of thousands.
Right. Yeah. Exactly.
And that's what they did. But it all started with the premise that the trading strategy had a positive expectancy. You see what I'm saying?
Mm-hmm.
That's all they were doing. And I have it on good authority. Like he never said he passed on within the last couple of years.
Yeah.
He never said that.
Hmm.
Right?
Fact, last year.
Say it again?
it was last year.
Last year, 2024.
Right. Didn't I tell y'all to look it up later?
My bad, man.
But he like that whole firm is a beast. Here's something else that's interesting. That's the only fund that performed that way. They have a ton of other funds in-house that are pretty much the same as every other fund in the world. You know, they have some good years, they have some bad years. Right?
Right.
So that tells me that the Medallion Fund had a strategic advantage. And that advantage was they weren't buying shit and trying to hold it for X number of years.
Yeah.
Right? And that tells me that strategy, like who's a fan of are you guys fans of baseball?
Yeah.
Yeah, kind of. Well, I mean, I can't watch it, man.
Don't have to. The owner of the Mets now, Stephen A. Cohen.
Yeah.
Right?
Mm-hmm.
Is another short-term trader, right? So what he did when he was coming along was he was a fast trader as well, right? But not using computers. What he did was he had pods of traders it was called SAC, asset management at the time. Now it's 0.72. But he had pods of traders who focused on individual groups of names. So, and they were called fast money. They would trade in and out all day. Right?
Right.
And it got to the point, he started as essentially a day trader. Right? But was able to grow his money exponentially. And then what he started doing, when he got to the point where he had like billions of dollars under management, you know what he did? His version of the Medallion Fund was he started trading traders as opposed to trading stocks or futures or anything like that. You see what I'm saying? How'd he do that? He'd have pods of traders trading different sectors. And as long as you made money, you made money. But if you lost as little as 5%, you were very likely to lose your job.
Dang.
Right? That was his stop. His stop was 5% on the money that he had invested with that group.
That's an incentive.
Right? So I say all that to say that it's extraordinarily possible, and it works as long as you are disciplined and your strategy has a positive expectancy.
Yeah, that's crazy. The 5%. That's a tight stop right there.
It was. But what it also did was it made them better risk managers, right? You know why? You know how? Let's say you have $100 million under management. Yeah. Somebody do the math on what a 5% stop looks like.
Shoot, that's a 5,000.
You said 100 million?
100 million, yeah.
Oh, that's man. 100 million. 1% is 1 million.
Yeah, that's 5 million.
That's like
Yeah,
5
5
million.
million.
Yeah.
Right. So,
5
so,
million.
so if you want to avoid the possibility of getting stopped out and getting your whole group fired, what do?
Yeah, well, that 5 million.
You always trade inside that risk,
Mm-hmm.
Yeah.
right?
I would
So
probably
you're
reduce it half just to be on the safe
exactly,
side.
Yeah,
exactly,
I was about to say, stay away from it completely.
exactly. So your position sizes are smaller.
Mm-hmm.
You just have more of them.
Mm.
You see what I'm saying?
Yeah, but does it cap your potential growth too?
That's the thing. That I'm glad you asked that question. Again, I'm getting away from what I was trying to teach you guys, but it's important that you understand this.
Mm-hmm.
It's important that you understand this. So that question comes from the idea and your understanding of how you make money from buying a stock. Right? Your
Mm-hmm.
understanding is the linear move, this move right here, right?
Yeah.
Takes X amount of time, right? So you
Yeah.
need to give the market or the stock or whatever time enough to make this move. Right?
Mm.
Did you read
Mm-hmm.
did you read the article that I sent you
No, not
about?
yet. I didn't get to yet.
Okay. So let's look at it this way.
Mm.
If you bought this stock, right, and it
I'm
returns,
sorry. I did. I did.
okay. So you got the 100% versus 1/2 of 1%.
Yeah.
Okay. That's the key, right? Because you don't care about making an enormous amount from any one stock.
Yeah. No, but what I meant was like, when you say stay within the risk management, right?
Yeah.
I want, because when you do that, I know it's you limit your losses, but also I want to know with that kind of stop is you are you simultaneously limiting yourself um going further too? I mean,
To the
as far as that,
upside.
Yeah.
yeah, the
You're
upside,
asking
yeah.
about the upside.
Yeah.
Right. But that's what I was saying. Right.
Uh-huh.
I tell you what I'm going to do. I'm going to send you guys today a stop video that shows you basically you will see along the the smaller you make your stop
Mm-hmm.
without changing anything to the upside.
Yeah.
The smaller you make your stop, the more money you make.
Mm. I understand that concept.
Right. But
Yeah.
but that's the key. Right.
Uh,
Um, um, and it's for all the reasons that you know, right? The more you lose, the longer it takes you to get it back.
Mm-hmm.
Or right? If your money gets cut in half, you got to make 100% to recover.
So, but if you put the stops on there, right?
Yeah.
Would you suggest to make more trade more? Well, you said you have to wait for opportunity.
As long as the expectancy, look, for any given set of trades has a particular expectancy.
Mm.
As long as the expectancy is greater than 0, you should trade the shit out of that strategy.
Expectancy is greater than 0.
Yes. And all expectancy is the formula for it is your percentage wins times the size of the wins minus your percentage losses times the size of the losses. And if you think about that conceptually, it makes sense, right? Because all trading is you want to make more when you win than you lose when you lose.
Yeah.
Mhm.
Yep.
Yeah. I was just
right? That's all. That's all it is.
Can I get
That's
the
literally
formula
all it
one more
is.
time?
It's the formula itself is the percentage wins times the size of the wins, average size of the wins, minus the percentage losses times your average loss. You got me?
Yeah.
So if I back up a little bit again, that's why I wanted you guys to play with like just taking trades,
That chart. Yeah.
right? Because what we were going to do is, and what we're going to do now the next time we come together is take those trades and pull out what the expectancy of those trades is. You see of that strategy, see what the expectancy is, right? Because if you can get the expectancy of a strategy positive, then all you have to do is focus on trading that strategy with exactitude, being very disciplined and only trading that strategy and only trading it that way, trading it the same way every time. Does that make sense?
Yeah.
Mhm.
Hold on, what's that?
Compounding.
So expectancy times
No.
the expectancy is the percentage times
Wins.
the. I gotta get my pen.
Hold on.
All right.
Hold on. I'm just going to pull up a chart real quick.
What?
Hold on. All right. So here. This is something I created a long time ago. All right. So expectancy, the verbal definition is the average amount you can expect to win or lose per trade over a large group of trades. Got it?
Mm-hmm.
Got that?
Yeah.
All right. So start with the proverbial 50%, right? Now notice this changes automatically, right? Because this has to equal 1. Your probability of winning plus your probability of losing has to equal 100%, right?
Mm-hmm.
Okay. So this has an expectancy of $25. You win $125 50% of the time. 50% of the time you lose $75. Got that?
Mm-hmm.
Okay. Now you start playing with these numbers to see what you can do, right? Like, so I always like to go to you only win 3 out of 10 trades, right? Lose 7 times. That has a negative expectancy, not a system you want to trade,
Mm-mm.
right? Hold on. I want you guys to get distracted by this. But if your average win, all else equal, you see that,
Mm-hmm.
right?
Uh,
Does that make sense?
Yep.
Similarly, if this looked like this,
Definitely trade.
still positive, right? You win 9 out of
Mhm.
10 times, you win $25. Your average loss um, uh, is $75, so much bigger, right? 3x. You still have a
Yeah.
positive expectancy. So expectancy really is the variability between these four things. Make sense?
Yep.
So what you do over time is you get a sense from your trades of what the expectancy of your approach is. Got that?
Yep.
And once you dial it in, what Jim Simons did was he had it so dialed in, and the computer programmers had it so dialed in the system that they literally were printing money legally.
Mm-hmm.
Right? And the only reason that I don't trade what's called system trades, right? Like, so write up have a computer program and have it trade for me. The only reason I don't do that, I think that's a great way to trade. I just can't do it because I don't know how to code. If I don't
That's
know
a
how to
good thing I'm
code, I
going
don't
to
know how to
school for
tweak
that.
it.
Yeah.
Right?
I got you.
And if I have to rely on somebody else to tweak it for me, I now
That's-
don't trust it.
Yeah.
Right. Yeah.
Because
It's unreliable.
It requires me to trust that person as much as or more than I trust my strategy.
Yeah.
Mm-hmm.
Right.
And that's hard to do.
It's very, very hard to do.
When dealing with finances, because they can always just
very,
make
very,
benefit
very,
just
very
them.
Look, and they don't even have there doesn't even have to be any malfeasance, right? It just like they would have to understand my trading strategy as well as, if not better than I do, in order to make changes, right? Because the computer's just going to do what you tell it to do
every time.
But if the person who's doing the coding tells it in a very particular kind of not so great way, right? Only by a little bit, right? That can be enough to turn my trading strategy into a loser.
Mm-hmm. I see where you're coming from.
So that's why I say that, not because like I don't think it's a good way of trading. I do actually think it's a good way of trading. I just can't do it.
Yeah.
You know. So I know one of the best things that ever happened to me was I learned my limits with respect to trading.
It's kind of like the concept of manufacturing. Like, a machine can't manufacture something as well as a human does.
Correct. Actually, I would say a machine can manufacture something as well as a human, but only if the person who wrote the instructions for the computer
can build the part up
is really good.
Yeah, they have to put all their understanding into that.
All their understanding.
Yeah, right? Trusting those coders it's not easy.
Exactly.
Yeah,
and certainly not in this space, right? Because all the coders are doing is translating your strategy into if-then statements for the computer.
Mm-hmm.
Right? Because that's all a computer code is, a series of if-then statements.
Then you gotta trust them not to sell your shit. You gotta contract like that.
Right. Yeah. So that's why, I stay away from that. But if I could code, I'd be a trillionaire right now.
Yeah.
For that reason. Right? Jim Simons, they made so much money. They didn't allow outside investors into the Medallion Fund.
Right.
The only people who were able to be in the Medallion Fund were folks who worked
for the Medallion
there. And they had so much money under management, they gave money back to the investors every year. The investors didn't even want it. They were like, no, keep going.
Yeah.
And they were like, no, it's messing up my strategy. Too much money.
Right. Yeah. I mean, That's hard. That's hard to believe though. But
It's
well,
hard
I mean, like,
conceptually, right?
yeah,
Well,
exactly, yeah,
well,
Everything
the
got to
more
have
money,
balance, right? So
the
anyway,
more money comes the basis of bigger or better programming to manage all that money. So
exactly.
and yeah, I get,
why
yeah,
mess with something that's already working?
yeah,
Well,
exactly. His system is this, yeah,
so one of the guys who made like $1 billion in the '08 crash,
mm-hmm.
I can't think of his name right now, but he was like an also ran hedge fund manager, never did particularly well, but was on the right side of that trade of the housing crash at that time.
Yeah.
So made $1 billion, and then he messed around and came out um, and said that he could essentially manage an unlimited amount of money,
Oh yeah.
right? Like his strategies could manage an unlimited amount of money. So I don't have to tell you what happened to his ass, after.
Yeah.
Sound like he got in over his head.
Yeah,
Shit,
because
he probably got a jumpsuit on.
no, he doesn't. And he still has money, but that was because he didn't put 100% of his money into the fund, right?
Mm-hmm.
And I point that out to show liquidity has a major, major impact on um, um, how a security trades and whether or not you can make money in that security. It goes back to me saying earlier that as an individual trader, you can be nimble in places that a fund can't be because they have too much money to squeeze into the trades. Does that make sense?
Yeah.
So anyway, what time is it? Place. Oh, okay. Ooh, really? It's almost noon. Damn.
Yeah.
Okay.
Time flies when
I
you're
told
having fun.
I told you guys
Yeah.
I it wasn't painful for me to spend all those years looking at charts. I'll say it that way.
Right.
All right. So here's what I want you to do, right? Because it's my wife's birthday, so I'm not trying to get in trouble.
Oh,
Birthday to her.
damn, happy birthday.
Happy birthday.
Yeah,
Yeah,
I'll
for
pass
sure.
it. So the only thing that I didn't tell you guys about was how to think about exits, right? You know about the stop loss exit, how to assign a stop loss to your trade. So let's just go through, finish this trade. And then what I want you guys to do is write the strategy down, right? And know that I know that you're going to get it wrong, right? But write it down, send it to me. I can correct it, send it back to you. And ultimately, we'll get it to a place where you can trade it with no money on a number of trades, right? And then you should just go buck wild and trade it, right? So your goal is to get 100 trades in before we meet next, because what that'll allow us to do is to have a real sense. If you're trading it with exactitude, it will allow us to have a real sense of the profitability and more importantly, the expectancy of the strategy. Does that make sense?
Yeah.
All right. So taking this stock again, right? Change of heart right here, right?
Mm-hmm.
So you drop down to the daily, looking for an entry, right? I almost don't care what your entry is here. I'm much, much more concerned with where you put your stop, right? I advise that you always have it be the low of the swing, right? So the low here, right? So 85.47, so 85.46 it would be if you took the trade at any price here. Does that make sense?
Mm-hmm.
Yeah.
Right? So the low of a previous candle, if you took it over here somewhere, right, I would want it to be the low of this swing.
Okay.
right? So if you took it over here, I would want it to be this low. You got me?
Gotcha.
Here, I would want it to be this low. Also, re-entry, right? Really, really important. So if you get stopped out of a trade that has turned, the other thing that you have to do is you have to put any stock that you're trading, you have to put this low, because it's the ultimate low. You have to put this on here, right? You see this?
Mhm.
Yeah.
You have to put this on here, right? So what is that? 65.60. Then you go to the daily. There it is, right? Now, what is that? As long as price, if you get stopped out up here, because you're going to get stopped out tight, right? If you get stopped out up here, you can go back in as soon as you see another entry, right? So it takes out the high here. Boom. You get back in, right? Your stop is the lowest low, call it, of the last 5 bars. Make sense?
Mm-hmm.
We're going to tighten that over time and get it closer and closer and closer. But we're also going to be tightening your entry mechanics, right? Make sense?
Yeah.
Yeah.
Okay. Now, the last piece of it, your target for the trade. You got me?
Yeah.
Make the target for the trade 3 times the risk on the trade.
Okay.
Make sense? So
Mm-hmm.
your entry price is 100, your stop is 97, right?
All right.
Your target is 109.
All right.
On all of the trades. Don't vary it.
Yeah.
Why am I doing that? You are de facto creating what kind of has to be, depending on where the percentages fall, a positive expectancy scenario, right?
All right.
Because you're making 3 times your average risk.
Mhm.
Does that make sense?
Yeah.
Yeah.
Okay. Sizing your positions, right? You are going to start mentally with $10,000, right?
All right.
How do you get the size of your trades? You take the price where you want to enter minus where your stop's going to be, and you divide that into 3% of the $10,000. Or if you just want to do, like, you know what, I just want to risk $1,000 per trade, that's fine, but have it be, and it's probably better, especially since we're trying to get to 100 trades, right? So
Yeah.
have it be $1,000 is your risk, right? So you divide that by the price, the entry price minus the stop price.
I'm gonna divide that by 1% of the 10,000.
Not 1%. No. Divide that into 1,000, right? So
Okay.
in the example from earlier, the $3 of risk, you would say 1,000 divided by the 3. You got me?
Mm-hmm.
And that would give you the number of shares that you should buy. You got that?
Yeah.
Now, there are going to be some names where you can't buy 300 shares, based on the amount in your account, right? So you have to make
Okay.
a decision. You size it down or you don't trade it. Does that make sense?
Yeah.
Mm-hmm.
Mhm.
And the reason why I'm having you size it this way
Risk.
is it's the best way to control with any level of exactitude your risk, right? Because whatever that number was, 333 or something like that. If you lose the $3, if you get stopped out, how much did you lose on the trade?
What, $3?
$1,000 that you wanted to risk.
I mean, yeah.
You see what I'm saying?
Mm-hmm.
And now that I'm thinking about it, don't do 1,000, do $500. If that's what you
500.
if that's what you choose to do, right? So 500 divided by the 3 as opposed to 1,000.
Okay.
Because it's going to give you more trades, right? Like if you have a run of 10 losses, then technically you're done.
Yeah.
You see what I'm saying? And I mean, all we would do is just email me, and all we would do is reset. But let's just have it at 500, so you wouldn't be trading as big a size. You would be trading 150 some odd shares on that same trade as opposed to 300. But the game is not, let's make as much money as we can right now. The game is to get a process down that's going to allow you to make money, and then you trade the shit out of it.
A full understanding.
Make sense?
Yeah.
Mm-hmm.
Can you say that formula one more time for me?
Which one?
Use the entry. You're talking about the entry price minus the stock price.
Yeah.
Divided by 1,000. I think I just want to double check that.
Hold on. I'm actually thinking about like setting up, because I have all of these, as you might guess, I have all of these formulas.
Mhm.
And I've been long thinking about setting up.
Are you gonna send this video out to us, bro?
I might. Why? You
Okay.
need it?
Well, I noticed you said that you was recording, but I always like to go back over it. You know what I mean?
I got you.
I got off mad late, so I'm still kind of cloudy this morning. Forgive me.
Got you. Yeah, I can do that. Hold on. Let me show you this real quick. All right. So position sizing is a thing, right? And we said it was $10,000
Yeah.
Mhm.
to be. So it would be $500, and we said entry. What did I say? 100,
Yeah.
and the stop was 97. So see this? It calculates it for you automatically. You feel me?
Yeah.
Mm-hmm.
The problem here is it would be too costly. You see what I'm saying?
Yeah.
Yeah.
And I also use Forex in this particular formula that I had set up. But so let's do
25.
right now. All of a sudden, right,
You understand?
Yeah.
it's within the realm of possibility.
Oh yeah.
See that? The other
Yeah.
thing you can do is, let's say you started with, right?
All right.
So it's much more possible. You know what? Let's do this. Oops, sorry. There we go. Now you're cooking with grease, right? So if you say if we're going to start everybody at $100,000, right? Your risk is 0.5%, right? So now you can have a lot more trades on at the same time. Make sense?
Mm-hmm.
Yeah.
Um, um, so that's what I want you to work with, um, and what will make the most sense. Any questions?
So we just were trying to test the
what's it called? The strategies with buying the shares, right?
Well, the first thing I want you to do is you wrote down what I just told you,
Yes.
right? One of the best practices any trader can have is to write out his strategy, right? Write it out, put it in an email, send it to me.
Okay.
You got me?
Yeah.
We're going to go back and forth until it's like, until it makes sense. I will likely ask you some questions, right? To bring you to the point where your understanding and the strategy itself match up and make sense. And then I want you to engage with it. Does that make sense?
Yeah.
Yeah.
Cool. All right, gentlemen. I will let you proceed with your days. As per usual, if you have questions, I haven't figured out a way to get you guys to be able to sign up for this yet. So let me show it to you so that you can find your way to it and get signed up, because that's where I think I'm going to post a lot of these things.
Ryan, what's your email address so I can send you my business account address?
I'm about to give it to you right now. Hold on.
10-4.
Sorry, I'm in the back end of this thing. And one of my particular difficulties has always been, I know a lot about trading, not so much about other things. Shit, that's the wrong place. That should be it. All right, so you guys should be able to see if this post in here. First of all, that's not right. That's right. Let's do this. Click on that and see what it takes you to.
Subscribe link.
A subscribe link?
Yeah.
Subscribe there with your email. The one that you want to use to communicate with respect to this training.
All right, I just did it.
All right. So what did it take you to?
It told me
It's
it was
requested.
requested.
Say it again.
It said that it's requested.
Oh, wait, then let me look. I'm sitting there like, let's see. Because I definitely have it set that I have to approve. Because I only want, the people that are in this group to be in this group. You know what I mean?
Yeah.
So that sounds like emails coming through. Let me see. Let's see what you got. You should be getting approvals back to those email
Yeah.
addresses.
I did. Mm-hmm.
Yeah.
Cool.
Oh, it's got an app.
Oh,
I
yeah.
use that.
Yeah, Substack is a whole thing, man. Wish I had thought of it.
Should we use the app?
You don't have to, because you can go to the webpage. And by the way, you'll be receiving emails from me that will link you back to it.
Okay.
So yeah, it's not this is a newsletter format. So
Got it.
it's fine on that front. Make sense?
Yeah. Yep.
Okay.
It,
Yeah, I'm still waiting on the link. Hold on.
it's in the.
Reading Zoom. In chat.
It's at the bottom.
It's in the
Well,
chat.
it's in the chat in the thing, bro.
Oh, I signed up for it, but it sent me to another page and I was waiting on a link.
Oh, it did? Hold on.
Yeah, mine says if you have an account with us, we'll send you an email to the account that I typed in with the link. You can use to sign in.
Oh yeah. She got.
Are you signed up to any other pages on Substack?
Not. I don't believe so.
Because it
Hold on,
hasn't
let me
come.
refresh my email, see if it came through. I'll check.
Well, it's not connecting to me because I haven't gotten a I have to approve you
Yeah.
to sign up to the page. You see what I'm saying?
Mm-hmm.
Just to clarify, the Substack you just sent us is the art of simple trading. Right?
Yes.
Okay, just make sure.
That's the overarching, right? So the art of simple trading is like the overarching platform.
Mm-hmm.
And then if you look at the top, training cohort number 1
Yes.
is its own thing.
Okay.
There's nothing under it yet. But that's where the information will be housed.
Okay.
I'm gonna try to re-enter my email again.
Yeah, do that. Cheb, you got it? Or did I lose him?
I think so, yeah.
Yeah.
Wait a second. Oh.
It says requested.
Say it again.
It says requested.
All right. So
Yeah.
it should, if it doesn't come in a second, then I may just take your email and, oh, there it is. There it is. All right, young fella, you should be good.
Oh yeah, I got you. Appreciate you, sir.
Yep. Chad, where you at? You might have had to step off.
Yeah.
Jake, make sure he knows that he gets that link and can get signed up if you don't mind.
Yeah, I'm gonna send it to him right now.
I'll say he in here.
Yeah.
Oh, he got his mic muted.
Yeah, he may have had to step off for a second.
Yeah, take a call or something. Yeah.
Yep. All right, gentlemen, I got to bounce.
All right, man.
Any
All right.
questions? As always, I'm going to try to get this post produced and posted as soon as I can.
All
All
right.
right, guys.
Cool.
Appreciate you.
Yeah.
All right.
Thank you for everything.
Thanks.
Cool. Have a good one.
You
All
too.
right, you
Enjoy
too,
your
man.
day.